So what's going on, everybody? Welcome to a webinar that I'm going to host for obviously the day trading institution students and then the free Telegram as well. Right. I haven't done a free webinar in a very long time, so I decided to just kind of do one for you guys. But anyways, like I said before, I'm going to be going over GJ, gold, and US30. If you guys would like to, I can also go over like the S&P 500 or the
What about Nas?
yeah,
Nas?
I can also go over NASDAQ. Right. Anyways, let's start with GJ. So GJ over the last literally few weeks has been kind of consolidating and stuck in a range between this 161 and let's call it this 164 level, which has now finally broken out of that level. Now the range had been getting tighter and tighter over the last few days. We did see price consolidate and start consolidating in a smaller range from 161 to 162. 700, let's call it, which is why I didn't take any trades on GJ because I just rather wait for the breakout. Now, price did break out to the upside after rejecting 161-100, which is great. I mean, ultimately that's kind of what I expected, but really, I played it safe and waiting for price to actually break out. Now that price is trading at 166.250, we're gonna have to wait and see what actually happens because again, 166.250 is a major resistance level throughout this kind of entire consolidation range that we've seen GJ in since literally April, let's call it, right? So it's kind of obvious if price breaks above 166.250, you can expect price to go into the highs of 168. You can always play a break and retest setup into 168. Now for sales, because I'm sure a lot of people are probably looking for sales, I'd be a little bit concerned to actually short this momentum because this is a lot of bullish momentum. Realistically, like breaking it down to a lower time frame such as this hour time frame, you have support here at 165 200, let's call it, right? And then we have resistance at the highs of 166 250. So you can either place one of two ways if you're going to be looking to actually buy, right? You could wait for price to come back down into 165 to 200, 165 250 range, or you could wait and then you can look to buy there and look to take profit at 166.250, or you can wait for the break and the retest of 166.250 and look for price to go up from there. I mean, that was pretty simple. GJ, do you guys have any questions on GJ? Let me know in the chat before I move on to any other pair. I'd kind of just get each one out of the way. No questions? Any questions? Or are we good to go?
Oh, someone said in the chat.
Let me see. Yeah, there's a lot of questions coming out at once. I mean, you could type questions in the Q&A, you could type questions in the chat overall.
One of the things they said was is the Queen's death gonna affect the market open?
For sure, we're just gonna have to see how it does. Okay. What time frames do you enter trade? Typically around typically in the same time frame, like the hour time frame is when I'm gonna be looking at it. Sells all night long. The thing with sells is like you're going against all of this momentum, and that's something that concerns me for looking to take sells. You'd be fighting all this bullish momentum. So I rather wait for confirmation and look for sells. And I actually forgot what I would look for sells. So for me to actually want to short GJ, one, I would like to see a break of this 165 250 support. Once I see the break of this 165 250 support, I'll wait for the pullback into this area and then look to sell from there down into 164 900. That's literally what I would wait for if I were to go short, right? Now, moving on to gold. So gold, it was pretty easy. Gold had a nice bullish move. So we have two major areas in gold, and I am expecting gold to continue to go up long term just because of everything that's going on in the economy nowadays, right? There's two major areas that I'm looking at here on gold being 1694 and 1722. This is major support. This is major resistance. Right now, our nearest areas after that would be 1681 and 1761 as another form of major support, another form of major resistance. So gold actually rejected 1694 a few days ago, which could have given you an option or a signal to look to start taking long positions. And again, like when you incorporate the things that are going on in the economy with what's going on with gold, now you have to wait for the buy signal. Like if you have a fundamental catalyst that is giving you a strong buy signal, you have to wait for the price action signal to start telling you to actually buy. So gold had actually came down into support at 1694, where you could have looked to start taking buy positions once gold was at support yet again. And the first signal for you to start looking to go long on gold, if you're somebody who waits for candlestick confirmation, would have been this 4-hour candlestick right here. You could have also bought in on gold with this 4-hour double bottom here with this loss of momentum. It definitely would have been a little bit of a sketchier, more aggressive entry in terms of like not waiting for that buy signal. You're just straight up buying at support, which some people do take trades that way. And, limit traders also trade that way as well. But in this situation here, I wanted to wait for a little bit more confirmation. So gold actually ended up continuing to go bullish. And the first sign for you to actually start looking to take a long position, this is where I started to actually look to take buys on gold. Never ended up taking the buys because I had an emergency that I had to go to. It would have been this break and retest here on this 15-minute time frame. Once price made new highs on this 15-minute is when I started to look to buy gold. Could have waited for the pullback, waited for price to retest this minor area of structure, and then look to take a buy up into 1722 there, which this is where you would have been stopped at break even, but price continued to go up right after that. Now with gold, I'm going to be expecting gold to continue to actually go up. But again, like we're kind of stuck in the range where we have resistance here and then we have support down here. So at this point in time, for me to actually want to continue to actually buy gold, I would like to see a break of this 1722 resistance just to see that there's enough buying pressure there. Then wait for a pullback into 1722 resistance, where I would then look to go long after some rejection. And again, a rejection can come in all forms and sizes. You can have a rejection that looks like this bearish candlestick, or you can have a rejection that looks like that bearish candlestick. Ultimately, more importantly, though, I'm going to wait for the rejection on the 4-hour time frame first, and then go down to the lower time frames and then start looking to actually take a buy position there. I'm not going to be looking to sell gold at all. I'm going to continue to wait to actually look to take longs. Now, let me know what questions you guys have on gold before I move on to indices. Just let me know in the chat, or if you're in the day trading institution, you can just talk and let me know.
Yo, Raul, for that gold right there, you were looking at the 15-minute when it did the break in retest, or
yeah, I was looking at the 15-minute because for me, like I wanted to try and place my stops under this this 1694 area as much as I possibly can. And me knowing that we have a pretty big stop loss, if I were to have just taken pretty much a buy position at this point here, I wanted to wait for some form of a pullback, which would have been on this 15-minute time frame right here, because this is a minor break of structure. And the way I saw the trade play out was, well, okay, price had already rejected 1694 1, 2, 3 times already. So if price can continue to go up and we can see this structure actually reject, I'll take a buy somewhere along a break and retest here. And then I could place my stop loss roughly like somewhere under this 15-minute support, which would have been here. This would have been my first buying opportunity. And then I could have possibly looked to try and target this area up here, which would have given me 5 times my risk, which this stop loss is a little bit tighter, and the setup that I would have taken, I would have definitely used lower risk on. So if I normally risk 2, 3, 4% on a trade, on this type of trade, I would have risked only 1, 1.5, 2% on this position, because again, like major support is down here. It's not right here. So that's kind of how I had my mind wrapped around the trade. And then I saw, well, okay, if price does hit this stop loss, and I'll wait to see if price can reject 1694 again before looking to actually buy again. And then, I could have taken another position there. That's kind of how I saw this setup in the trade.
Thank you, brother. Do you think, like, for people that wouldn't have caught that retest, you could have got a later entry after that bullish engulfing on that?
Yeah, you could have got another entry on gold right here on this hour time frame. This would have been a clear sign of continuation to the upside, and you probably would have seen no drawdown compared to taking, a possible entry here or here.
Thank you, brother.
Yeah, but this New York session, I believe, around here.
Yes.
Yeah.
I took a long from the bottom and then caught it again on that retest also.
Yeah, that's kind of.
And then my targets were 1722 until it breaks that. I'm not going long.
Yeah, that's what I'm saying. I'd rather wait for the break of 1722 before looking to buy. And again, we're only in the Asian session, so.
Hey, Rob, I got a question. So you say you went for 1722 to break and do a retest so you can take buy. How about if we reject 1722, you would take sell?
I don't think I would take sells, just because the way it's playing out here on the weekly time frame. This is major support throughout gold. So like this entire zone is major support here on gold that it's literally rejected, time and time again. So I would just kind of continue to
And
wait and look for
If you go to
buys.
the daily, there's like a bullish engulfing
Yeah,
earlier
there's
during
one
the
here,
week.
there's one
Yeah.
here. That's already two signs.
Yeah,
for
that's like
buy.
a small double bottom, right? Like, would you consider that a double bottom? Going to like a smaller time frame?
I mean, everybody would consider this type of structure different. Some people would consider this to be the double bottom, while others
Yeah.
would consider this to be the double bottom. Ultimately just depends on the trader. Definitely on the 4-hour time frame, though, this is 100% a double bottom.
Yeah.
So that's kind of what I would wait for. It's just like the break of 1722 and then look to buy from there. You don't see as liquidity these major zones. Yeah, so I mean, supply and demand, support and resistance, you're gonna have liquidity throughout these entire zones, which is why I really only try and take trades off of these supply and demand levels, because that's where you're gonna find liquidity. That's where you're gonna find buying and selling pressure. Okay, so now US 30. So looking at US 30, I'll do NAS. I'll do NAS after. So looking at US 30, if we look at the weekly time frame, overall, we've seen bears come in for the last 2 weeks, which is something that I kind of expected. Now, I didn't expect US 30 to actually start giving me this type of pullback here, because now we can actually start seeing US 30 pull back, especially the break under 31,500. So let's kind of look at it from a daily perspective. So we have a few major areas here on US 30, and the first area that I'm going to be looking at pretty much is this area right here, which is this area of resistance, which is at 31,500, which is why I took a sell position that day at 31,500, because again, when price broke under, I waited for the retest and then price continued to go short. Now price is trading back above 31,500, currently trading at 31,800 and making new highs on the lower time frame. So really at this point in time, if you're somebody who is looking to continue to go short with this overall bearish move here, then this is kind of like normal, healthy market structure, where it is actually starting us to pull back, where it could possibly form the first lower high point in this bearish move and then continue to go down after that. Now, the question really comes to is like, where can we see US 30 possibly, come up and form that lower high? So really, the area that I would be looking for US 30 to come up and form this lower high would probably be around this 32,000 range here. So pretty much throughout this entire range that we have right here is where I would expect US 30 to find some form of selling pressure. So I'm going to expect US 30 to continue to go up from this point here, and then come into this 32,000 area, and then kind of wait and see what happens. We'll have to wait and see what happens at this 32,000 area, because obviously there's going to be selling pressure in this area here, where we can then see US 30 kind of turn over and continue to go down. Now, if US 30 does break above this 32,000 area, then obviously it's going to continue to go up. Where could it possibly continue to actually go up to? And then that would be right here, roughly this 32,800 areas where it would be the next point. So really what I'm doing is I'm kind of sectioning off price on my major timeframes. It's like, okay, well, if price rejects this 31,500 area, then we'll see it come into this 32,000 area. If price breaks below the 32,000 area, we'll see it come up back into this 32,800 area. And that's kind of like how I like to section off my trades. Now, when US 30 does come up into one of these areas, you have to wait for the daily rejection to actually confirm that it's rejected that area, such as a doji candlestick or such as a candlestick that actually looks like this, which is just a simple rejection candlestick. And then really, there's so many ways you can play this out. You can wait for like a double top on the 4-hour time frame. You could wait for some form of a break structure on the lower time frames, but ultimately I would like to see the rejection on the daily time frame first, before making the decision that this could be our possible lower high point, and then we can continue to look to sell from that point on. As of right now, we could possibly see US 30 continue to come up into this 32,000 range, and then that's when I'll look to actually start selling again. But right now, this is not a condition where I would actually start looking to take shorts from. Really, we have to wait and see kind of what happens with price where it's at right now, which there is major structure here on US 30 on this 4-hour time frame. So let's kind of wait and see what happens here. If price can get above 31,800, then we'll see it come up into 32,000. So it's kind of like just a waiting game at this point in time.
Hey, brother, would you consider a fib on the daily, or you just look at those main zones, resistance?
I mean, you could use a fib. I just don't really use fibs all too much. You do have the 50% here at
Yeah, 'cause
30.
look at it, it lines up with that area too.
Yeah, you could wait for that. Let's see. Okay. Any questions on US 30? Really, like NAS and everything is gonna go roughly in the same direction. The SP 500. Would you buy it? I mean, as of right now, I've been trading the shorter time frames. Would I take a buy on US 30? I would have to really wait and see what US 30 looks like during the New York session, because a lot can happen by then. Like, I can open up the charts tomorrow, the New York session, and US 30 is, trading down here, and then that would be a completely different setup. If I were to look to buy US 30, like this would have been ultimately like where I would have wanted to buy, right? Once price broke above the structure point. If I were to look to buy US 30, here's the thing. I would like to see it come back down into this area right here, which would be like an intraday level. And then the way I would play this would be like from a 15-minute or a 5-minute time frame move, where I buy it from here to here, just kind of get in and out as fast as I possibly can, and not look to get married to a trade on US 30 right now, just because of all of this kind of choppiness that we saw here on this 4-hour and this hour time frame. Like, this would have been very difficult for you to actually be able to buy. Okay. Now, NAS. So NAS is kind of going to be roughly the same thing. It's just NAS kind of like the market structure on NAS is like a little bit cleaner. So when it comes to NAS so far has rejected 12,137, which is this major area of structure that you see here on NAS, which we see price continuing to go up from this area. And just taking a look at the daily time frame, you always want to look left, because structure is always going to leave you the best clues as to where price can travel next. So if you look at NAS, you should immediately already see that we have resistance here, support here, and then we have resistance here. Yet again, and what is price doing right now? It's trading all the way back up into this resistance level here. So when it comes to NAS, as long as NAS can maintain itself in between or under this kind of 12,500, 12,700 range, I'll continue to actually wait to sell NAS. This is going to be my sell zone here, which is going to be this gray box. This is where I'll start look to actually taking sells on NAS. So I'm probably not going to be trading for the rest of the week, just because it's going to take some time for NAS to actually get up there. But this is where like waiting for like the best trading opportunities comes into play. Although you could take short-term trades like on this hour time frame, right, on NAS, and just buy it on the way up, and then when price gets here, you could look to sell it. Me personally, I'm just going to wait for price to come into this area, because I found over the last few years of my trading, the higher the quality of the trades that I focus on, the more my profitability increases. And realistically, only taking one trade a day per that same session, which in this situation, I've really only been trading either NAS or US 30, 1 or 2 trades a day max. Nothing more than that has really kept me in line and waiting for my actual plan to set up. So in this situation here, I'm going to be waiting for NAS to pull back into this gray box again, which is where I will look to sell, because we have buying and selling pressure throughout this range. This is a level of supply and demand. And if price does reject this area, then we'll see NAS come back down, possibly to its lows at 12,000 flat. But we're just going to have to wait and see, what happens, because again, anything can happen. There's a lot of uncertainty in the market. There's also a lot of fear in the market, as you guys could see. But, I'd have to wait and see what NAS looks like during the New York session, because I can open up my charts tomorrow, the New York session, and NAS is down here, then it'd be a completely different setup. But the setup that I see right now in NAS, again, would be to wait for a pullback into this range, where this could be the first kind of real lower high point, and then we can look for price to continue to actually sell off. Now, if price does break above like this 12,600 area, this 12,500 area, then we could actually see price come up into this 12,900 area, where we do have the next level of supply and demand, which is all throughout this range here, which we do see price actually struggle at this area. So this wouldn't be another this wouldn't be another bad area to look to take a trade from. Now, if price does break above this area, and again, like kind of my setup would be roughly the same. I'd wait for the break, the retest, because I want to see support actually be established, kind of just like what happened here. Price broke back above support, retested a few times, and then continued to go up, and then look for price to come into like 12,900 if I were to look to take buys, right? But that is going to conclude pretty much the breakdown. I don't think I'm going to break down the S&P 500. Just gonna kind of go over questions now. Really, so let me know what questions you guys have in the chat. Okay. I already went over GJ. Use smart money concepts? No. Your favorite candlestick rejection patterns? I mean, ultimately, like it depends. Really, like what I would look for is a candlestick to form with a wick to the upside at an area of support or resistance. So this would be an example here of a rejection. This would be a great example here of a rejection, but this is kind of what like my favorite rejections look like. They look like candlesticks that look like this. And this is on like a daily or a 4-hour time frame. Then I'll break it down to a lower time frame and look for good opportunities in there. Do you wait for a retracement to the previous structure in the daily or the 4-hour? Yeah, so that's pretty much what I'm waiting on now. I'm waiting for a retracement here on the daily to look to possibly continue to sell. I already went over gold. Please explain how I mark up my charts. So real quick, how I mark up my charts is, let's just say this is the structure. This is the chart that you're looking at right now. Right, what I'll do is I'll identify my major areas. This is going to be a daily time frame. I'll identify my major areas and kind of section off price as much as I can into like 3 or 4 different zones roughly. And that's how I'll kind of do it. And then I'll trade in between these levels, right? So if I see prices trending bearish and we've just hit or just broken under this area of previous support, just kind of giving it an example, I'll wait for price to come back into this area to look to continue with this overall trend. Or, you know, I'll just kind of trade in between these levels. So if price breaks above this area of support, I'll wait for the pullback and then trade it from this level to this level. And I'll do that pretty much ideology of trading just support and resistance on the higher time frames and the lower time frames.
Hey, Raul.
Yeah.
This is non-technical, more like a psychology. Can you hear me?
Yeah.
Like when you were first starting out, did you, like all the books, like Trading in the Zone and all these other books, did you have to read those, or did you read them? Like, did you read them and then start getting more profitable, or did you like really not even have to read any of those books?
I mean, you don't really have to read any of those books, to be honest with you, but it's just about kind of like increasing your overall knowledge on something you're not that knowledgeable about, you know, and you'll pick up a lot of different things. Realistically, like the best way you're going to learn is by actually trading, because experience will teach you literally almost everything you need to know in the market. Not just experience though, trading actual live capital, right? Not trading demo, because like if you tell me, you know, you've been trading for a total of 6 months, right, but 3 of those months were demo, then I'm going to consider you to only be realistically trading for 3 months, because again, trading psychology is what makes up like a huge portion of what trading actually is. Now, when it comes to like down to like reading books and stuff, I try and focus on reading books that mainly focus on like price action and mainly focus on trading psychology. Those are like the books that I'll pick up the most on. So like one book that I really liked the most was like Trading Like a Casino, because it really helped me build that probability mindset that I have into trading now, and understanding everything is a probability when it comes down to trading. You know, and then all I really have to do is just manage my risk, keep my losses as small as I possibly can, and then look to increase my reward ratio when it comes down to risk to reward.
Thank you.
Hey, Raul.
Yeah, it's good, bro.
Hey, man. Question. Is there any major difference in the way you were trading like 3-4 years ago and now? Maybe, I don't know, you were focusing on maybe, lower time frames or
Oh, for
using
sure.
different strategies?
For
Because
sure.
I understand you're far in the game now, but someone that's starting, should we focus on those exact way you're learning, the same exact way you're trading now, or what would you recommend? How were you trading back then?
So when I first started trading compared to what I trade now and how I trade now is completely different. like my trading methodology is always evolving in a sense that I'm always just trying to simply get better and really just focus on price action, right? So I wouldn't really say like there's been huge differences, but I used to trade with like fibs, a bunch of indicators, I tried out like MACD, I tried out just different indicators in general. And slowly as like the years started to progress, I've really tried simplifying my trading overall. And I started slowly removing like this indicator here. I started slowly removing RSI. I started slowly removing like fibs or like moving averages. And really like my trading nowadays is solely based off of market structure, price action, supply and demand. And that's kind of basically it. And that's how I've been trying to like continue to focus on my trading, because if you can get really, really good at simply just reading price action, then you can actually set yourself up to be an amazing trader in the future, because you're not relying on this indicator to do this, or you're not relying to waiting for this indicator to do that. You're solely just reading price action. If you become a really good price action trader, then typically, you'll find yourself making decisions that are a lot easier, that you don't have to think about so much. Because there's been times in my trading where it's like, okay, I see price overall and market structure is bearish, but the moving averages are blue over red. Maybe I should wait for the moving averages to change red over blue and then start looking to take a sell. But then the problem with indicators is that they're laggy. And by the time that does happen, the trade is already gone. And I could have potentially already made money on that position, and I missed out on that opportunity because I wanted to wait for a laggy indicator to tell me it's time to sell, So really nowadays, like I feel like if you could just kind of focus on like the core principles of like price action, market structure, trend, supply and demand, you'll be pretty good to go. Even just focusing like on supply and demand or support and resistance, like you could take that concept to almost any time frame and overall make money,
How about when it comes to the amount of trades you were taking? Because I imagine doing this simplified way now kind of takes a few trades off your back compared
Yeah.
to before. You're probably making more trades back then.
For sure. I was probably taking like 5 or 6 trades a day, like when I first started, because the problem with trading, like when you're in the regular workforce, ultimately when you work more and you work harder, you'll get paid more, right? That's not the case in trading. And that's kind of the way I saw things. And I also saw things from like a productivity standpoint. If I felt like I wasn't in a trade, I felt like I wasn't being productive, which that's a completely wrong mindset to be in. Sometimes doing less is a lot better in trading. And nowadays, really, like the one thing that I can tell you guys to do, like right now off the bat, to improve your trading and your over trading, for those of you guys who over trade, is literally just focus on one pair, one trade a day, and then that's it. All right. Or you could do like one pair is like 1 to 2 trades, right? 2 trades, I would cap it there, but just one pair, one trade. That's it. And ultimately, like one session too, because you don't want to trade the London and the New York session, or be the type of person who's trading Asian London and New York, right? You want to come on to a pair. Like let's say you're going to trade US 30. Find out what time that specific pair has the most volatility or volume, which is going to be roughly at 9:30, and realistically only try and trade it around that time where there's going to be a lot of volume. So for the examples of indices you only want to trade during the New York session. You don't really want to trade outside of the New York session, because that's when you're going to see the real big moves happen in the New York session. Very rarely you're going to see indices move a lot outside of the New York session, but that's the time you want to be trading indices, right? Or with gold. With gold, you could trade either the London or the New York session, but ultimately you just got to pick that one pair to trade consistently for that one session. Because if you trade one pair every single day, and let's call it you trade that one pair for the next 6 months, even just that one pair for the next month, you're going to learn a lot about how that pair moves and how that pair reacts to certain levels or different situations, or even like certain news events like NFP, FOMC, whatever the case might be is, so that's kind of like the best advice that I could give you right now, to just like, if you want to start seeing like an instant improvement on like your over trading and your discipline, just literally one pair, one trade a day. That's it.
That's all you need.
That's all you need. Literally.
Thank you, man. And do you have any like personal rules, financial rules when it comes to withdrawing? Like you only withdraw 20% of your profits or anything like that?
I mean, very recently, like I've been withdrawing almost every single trade that I take, because I've been having like huge 6-figure days. You know what I mean? So like, I can give you an example. Like if I have an 135K profit, I'm going to withdraw maybe 35,000, leave 100,000 to continue in the account. That's how I've been handling my withdrawals over the last few days, over the last few weeks, realistically. But then sometimes I'll have like an 100K profit and I'll only withdraw maybe like 15% of that. It just ultimately depends on the size of the trade, because if it's not like a very large trade, in my opinion, like if it's like a $25,000 day, which is still a great day, I won't withdraw anything. Maybe I'll withdraw like 2-3 grand, but the majority of the time I won't withdraw anything. But if I have like a really large trading day, of course, I'm gonna withdraw, and you want to withdraw. You're here to make money and pull money out of the markets, not to leave it in your account,
Thank you so much, man. Appreciate
Yeah,
it.
and another thing that can help with the over trading is like having a daily maximum drawdown. So like if you got a rule for yourself like 4%, like if you take 2 trades and you down 4% for the day, just leave it alone, come back the next day.
I mean, yeah, ultimately, like, it'd be very hard to even have like a max drawdown for the day if you're really only taking like 1 or 2 trades a day. That's something that, helps me a lot, is really only just focusing on 1 or 2 trades
Yeah.
a day. So, let me check the chat. I'm gonna check the chat. When are we getting emails about getting accepted into DTI? I'm not sure what you're talking about, bro. I mean, or if you're talking about the boot camp, which includes DTI, you should get those acceptance emails probably tonight. I gotta ask my assistant when he's gonna send them out. It just takes some time to go over every single application. Now that you'll be trading New York session, will your signals also be from New York session? No, they're still gonna be London session. There's just so many questions I can't really like try and pick. Congratulations, baby. Thank you. I can't really try and pick one. It's just flying. Personal capital or funded capital. The way I feel about trading on funded accounts is like, if you're not already consistently profitable, you don't want to trade on funded accounts. But at the same time, what you guys want to do is, just open up an account with whatever size account of capital you're comfortable with depositing. Just open up a live account, because when you open up a live account, you'll be able to understand the biggest part about trading, which is yourself and understanding your own emotions and how you react to certain situations. Once you're already profitable on your own personal live account for the next 2 or 3 months, realistically, like 3 months, if you can make a return on your trading account has grown. Let's say you deposit 2 grand, and in the next 3 months, it's at $4,000, which is great. Then that's when you could be like, okay, I'm going to move into a funded company. Now, funded companies are here so you could take advantage of them, right? Essentially, what I would do is continue trading your personal account while you're trading your funded account. Use all the money that you make on your funded account to fund your live account. Because imagine you get, like, let's just say you have a max allocation on FTMO 400K, and you make 10%, that's 40 grand. That 40 grand, and you probably get paid, I don't know, 30, right? That 30 grand after your profit split, you want to reinvest it back into your own live account and continue doing that, because at the end of the day, there's going to be nothing better than trading your own capital. It's your rules, your money, trade it however you want, versus you're very limited on a funded company. They limit your growth on a funded company. With 5K, what's better, FTMO or straight risk to 5K? Honestly, I would just trade with the $5,000. Again, like, you only want to go in a funded company and trade with a funded company when you're already consistently profitable. It's just so many questions. I don't know where to pick and choose from. Any psychology tips? I mean, it depends on what. First,
Yo,
like,
I got a question for you.
yeah.
How do you deal with drawdown? Because sometimes like I be on drawdown and I just psych myself out and close the trade. So like how do you deal with that?
In what do you mean by psych yourself out and close the trade? Are you closing the trade in drawdown, or are you closing the trade in, like, you're cutting it early?
Like cutting it early, basically.
I mean, again, like, you're always gonna have different, I guess you can call it like psychological barriers throughout your entire trading career, right? There's just so many different levels to actually reach. But ultimately, like, when it comes to drawdown, what I focus on mainly is, am I making any mistakes in my trading, and how can I improve from those mistakes? That's why creating a journal, having a journal is so important. But like, when you take a look at the overall concept of like your losing streak, you have to identify, is it a normal losing streak, or am I making mistakes that's causing myself losses, and then continue to look to see where you're making those mistakes and look to improve from there. trading is all a game about self-improvement and how you can improve. You know, did I enter a trade too early? Did I get out of a trade too late? Because there could be times where you enter a trade, you'll be in profit or be almost at your target, and then price goes all the way against you and it'll hit your stop. You know, like there's so many different possibilities in trading. But ultimately, again, like the more important thing is you need to be able to keep a track of all of your trades with screenshots of when you got in, when you got out, and an explanation as to why you took that trade. And then you improve from there, because you need to be able to go back and look into your journal and see where you're making these mistakes.
Bet, I appreciate you.
Psychology tips on managing big amounts. I mean, managing big amounts is all about a level up, because somebody could come to me right now and be like, hey, you know, I have a pretty big trading account. You know, I have 50 grand in my trading account. And, you know, that could be considered a big amount to that specific individual. But then, you know, you have another individual who's like, yeah, I've got 2 million in my trading account, you know? So at the end of the day, it's all about a level up. But I mean, at the end of the day, like when it comes to trading in general, like you just have to be comfortable and accepting of the risk you're taking, right? If you have 100 grand in your trading account and you're like, okay, I want to take a $15,000 position, you have to ask yourself if you're comfortable taking a $15,000 position. If you're not, then don't take the trade.
Hey, Raul, question for you, man. Is
Yeah.
there a limit when it comes to capital size? When you start getting limitations from the brokers, we're talking like 2, 3, 5 million. When maybe liquidity is not as big, or they might not let you do.
Yeah, so I mean, the issue that I first ran into was they would limit my lot sizes, so I couldn't enter anything past the 50 lot. So then, you know, you'd have to talk to the brokerage and then, you know, try and work out a deal, or maybe even just move brokerages. But really, ultimately, like if you're trading with a good brokerage, you should be fine. The only thing I would have to worry about really is like issues with slippage and entering like those really big lots and wondering if your orders are getting slipped or not. Because like earlier this year, I've had a few trades where my orders slipped. You know, I tried buying gold, for an example, at 1700 flat, right? And price put me in at like 1710. And, you know, entering 50, 60 lots, you know, I'm already in drawdown 12, 13,000 because my orders got slipped.
What's a percentage usually for slippage? Is there like an average percentage when slippage happens? Like
I mean,
maybe.
it depends on the broker.
Gotcha.
You know,
Okay.
some brokers have protection against slippage, which your order won't even go through. But then, you know, you have other broker, and it depends on the broker's A book or B book too. Because if the broker's B book, then typically your order is going to go in right away. But I mean, there's so many like different possibilities. Realistically though, like if you want to fight slippage, and make sure your orders aren't getting slipped, instead of entering 100 lots, you know, you could do like 250 lots, or you could do 425 lots.
Yeah.
Hey, Ro. So
I want to join your signals, but I don't have a PayPal. Yeah, you could pay with card. It's fine. You don't got to spam it, you know. For sure, like for a fact though, the questions that I see are being spammed. Like, I'm not even answering. I'm not even gonna waste my time.
I know it's like 1,000.
Literally, bro. My bad, bro. What were you gonna say?
yeah, hey, brother. So like right now I'm currently on a trade on Euro USD, and my account's up like at 250. What do you recommend doing at this point? Closing out majority of my profits, or like letting it still run? Or
I mean, here's the thing, like before you enter a trade, you should know roughly when you're gonna get out of the trade before you even enter the trade. Because remember, like the way I trade is you set targets, so you know where your targets are gonna be. So that's a question that you should answer.
can you go to Euro USD on the 1 hour time frame? And this thing it's been ranging right before Asian session. I opened up these trades, and it's finally that one bullish candle going on right now. It finally took off. Now, I don't know what would be an area of target. Should I do like risk reward, like 3-to-1, 2-to-1 for my entry?
I mean, like you're trading during a time where there's really no volume, especially for your USD. So, you know, I can't tell you what to do because it's your trade. And you know the reasons why you took that trade. Ultimately, if you're up 2-to-1, 3-to-1 risk reward ratio, you're up 3 times what you're risking. That's pretty good, you know. I just again wouldn't be married to a trade, especially not during Asian session, because what could happen is there could be a pullback in the opposite direction right before pre-market London session, and then London session may continue in your favor or go in the opposite direction.
Sounds good, brother. Thank you.
So answer only like questions for the next 2 minutes. I'm gonna cut the webinar off at 9. Whoever wants to try and get in like the last questions in.
Hey, Raul,
Yeah,
do you have any specific trading site book recommendations?
my bad, can you repeat that?
Do you have any specific trading psychology book recommendations?
Psychology books.
For trading.
I believe the best one's probably like Market Wizards. So he looks at different traders and how those different traders are.
All right, thank you.
Yeah. I believe that's like probably like the most popular one everybody talks about. What time frame do you look for entries? Ultimately, it depends. If I'm gonna be trading like a 4-hour or daily level, I'll look for entries like on the hour, the 30-minute. If I'm trading intraday levels, such as like an hour level, then I'll look for entries like on a 15 or 30-minute. But I really try and just focus on trading these major levels now and take entries based off like a 30-minute time frame. It also depends though, because like I've been trading indices recently, and the approach I've been taking on indices is a lot shorter of a time frame. It's been like a 5 or 15-minute approach. But yeah, so I'm gonna stop